please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, let's get talking about what's happening on the technicals of the market, and it's quite an interesting market at this point. 10,396 is where the Nifty is at, and currently it is Tata Steel which is your top loser on the Nifty. It's slipped below its 100-day moving average as well, so it's currently at around 656 rupees. Ashwani Gujral is with us to discuss the technicals at this hour. Ashwani, over to you then. One, for the Nifty, what would you be recommending to your clients, as well as secondly on PSU banks?
The other day on Friday, I had told Prashant at 1:30, picture abhi baki hai, which meant that the climax is still left. Today, this movie has started from climax. So chances are that today could be a really big day because we've started to expand below the range. 10,400, we don't seem to be holding on the Nifty. Plus today there is, selling on stocks which should be finding buying. Okay, fine. PSU banks are bad, they are being sold. But today HDFC Bank is also getting sold, and State Bank, with all its virtues, even that is getting sold. So early morning I did not see even a single sector in the positive. From the word go, there has been some big selling which is visible. Somebody is taking the view that they want to be out, and the stocks which are falling, it appears to be a foreigner view, as is borne out by even the numbers. So my sense is that this will get worse even during the day, and I wouldn't be surprised if we lose finally double of what we've lost right now. So say 120, 130 on the Nifty, maybe 400 to 500 on the Bank Nifty, because it's broken panic levels of the other day on Bank Nifty, particularly 25,050. So that means things have gotten a lot worse since then. And now with this new area opening up, I think basically easy 500-600 points on the Bank Nifty over the next few days. And Nifty also opens up basically 10,150, 200. Having said that, Tata Steel remains a sell with a stop of 670, target of 635. HDFC Bank is a sell with a stop of 1875, target of 1835. And Ashok Leyland is a sell with a stop of 134, target of 122.
Ashwani, I mean, technicians look at the price and that tells them essentially what the market wants to do. But if one were to just look at reasons, according to you, what is PNB that it's kind of tipped over after this huge rise? Is there anything else which is worrying the market, or a bunch of things coming together?
See, basically, the banking sector, there was positive news all of last year. Now all that news comes to zero if we suddenly figure out that there is many more skeletons in the cupboard than we had earlier figured out. Now all these Gitanjali etc. are NPAs. So basically, if the entire banking system gets killed, then who finances the growth? What is the point of the recap? So, somebody is taking that big macro view. Your exports are not going anywhere. Heavy labor-intensive sectors not doing well. So, there is very little going on for an overvalued market. So, that appears to be the view, because it's not PNB, it's not PSU specific. It's, lock, stock and barrel. Even IT space, which was looking good, even that is coming off. So definitely somebody is changing their view.
So if you're looking at it from a medium-term perspective, Ashwani, what would you recommend in terms of probably building positions in sector-wise?
See, given that rates are headed higher, so possibly, financials and kind of consumption, auto, etc., that may take a back seat. I think basically rural and infra and maybe even IT at lower levels you could buy. But for this, this sort of panic selling and, these climatic declines need to stop. And, all this news flow about fraud in X bank, Y bank, Z bank. See, a fraud-ridden market cannot go up. Let's be clear. If every second day there is some investigation and, what is the problem? ED goes into PNB, etc., and finds 3 other cases. Or, if you start having an audit, more cases will spill out. So the idea is markets like, calm news and a calm environment, not this kind of, proby environment where, bankers stop giving out loans. A lot changes when this kind of environment is built.
Okay, fair enough. Well, I'm sure we have a lot of queries in such a market, Ashwani. We have one, in fact, for today. Abhinav has 1,100 shares of AB Capital at 198, wants to know the way forward for that stock.
AB Capital hasn't really, worked out. So at this point, the best advice is that improve the quality of your stock, get into a better financial, maybe HDFC Bank, maybe IndusInd Bank, Yes Bank, and your capital will be safer than it will be at AB Capital. So overall, there is no major uptrend in AB Capital. So anyway, this wasn't a great stock, and now in this kind of environment, I think even if you have to stay in financials, stay with the top quality financials.
So 60 points lower, 63 points lower on the Nifty, 10,389 is where we are at this point. There's flashes at the bottom of the screen. Government is asking RBI why the PNB fraud went undetected via the central bank system. Okay, so this is according to sources to the News Rise wire agency. Our government has written to RBI flagging doubts over the supervisory role, I think. And the government is asking the RBI to check the efficiency of the process and systems to detect fraud at this point. I think we had the Chief Economic Advisor, Arvind Subramanian, I think, a day back in a speech saying some of these things, essentially maybe just wondering aloud whether the RBI needs to tighten the supervisory function a bit more. It was widely reported, and I think now we've got, according to at least this wire agency, the government writing to the RBI officially talking about some of these things. But this is big in that sense that the government is stepping in, is getting a lot of flack, getting a lot of criticism for its handling and handling of the PSU bank space. Now it's asking the RBI, the regulator, what is happening, what is going on. We'll get you more on this in a bit from now. Sunil Subramaniam is CEO of Sundaram Mutual Fund. He's joining us right now on the show. Sunil, thanks very much. What's worrying the market? Is it just PNB or is it other things as well?
I think it's triggered by PNB, but I think the worry is a far larger and wider worry. Like 2 things. One is we understand that a lot more public sector banks do not have linkages between the SWIFT system and the core banking systems. Now, what does that mean? So we don't know the extent of the liability. Because in the absence of a linkage, what happened in the PNB case was that an employee issued a letter of undertaking. So actually, if you took last year's audited books of PNB, this liability did not come up at all. That means this is not a loan. So today their loan book did not have this. So when somebody is asking why RBI did not, RBI supervised a disclosed loan only. If what is undisclosed, RBI can't find out. They cannot go and audit the SWIFT system, which is an international system, asking for details for every bank on earth. So this is something which is like totally outside the system. Now, as far as we understand, most private sector banks have this linkages. State Bank of India, most importantly, systemically, has this linkage. But we understand lots of public sector banks.
Which means whatever gets punched in into the SWIFT system shows up here as well, into the core banking.
Yes, in fact, it's the other way. That without it being in the core banking system, it cannot be entered in the SWIFT. So that's a check and balance. So if you are making a commitment to an outsider, without having internal approvals, you cannot originate such a message. That is the checks and balance. Whereas in the PNB system, an employee without, so there was no record of any loan to these people, right? So somebody sitting there could create a liability for PNB to the external world. Now, no auditor can find this out because it's nowhere in the system.
But by saying that, Sunil, you're saying it is essentially the handiwork of one or two people at PNB, but there is enough being written saying that it cannot be. I mean, such large sums being...
It's impossible because let's look at the process. A letter of undertaking was issued for a 90 days for an import of, let's say, diamonds, right? Now, what is this? This is buyer's credit, which is the person who's the letter of credit, he himself is going and borrowing overseas. Now, he could have borrowed from PNB domestically. He did not do so because he wanted a dollar loan instead of a rupee loan. He could have borrowed from PNB itself's overseas branches. He did not do that because he wanted to take somebody else. Now, that loan, when that bank then writes to PNB saying, hey, against your letter of undertaking, I have given a loan. Obviously, there's some here who would have got an email, some notification from that guy that he's lent against that. So who is that person? So because that person can't be this, because that's a Nostro account, which is probably handled by PNB's Nostro account in New York or somewhere. So that means that there's a totally different person. So obviously, clearly somebody has to check, then somebody has to confirm. So this is definitely not a two-employee.
So what is the worry, that it is systemic?
The worry is that such similar thing, especially in this very industry, all the banks were dealing with this. If this is there, how do you, today we do not know the extent of the liability because we do not know which employee or which bank has issued a letter of undertaking to which, for which, on behalf of which company without linking it to the core banking system. So every bank which does not have this linkage has to be now thoroughly investigated by a mechanism of Reserve Bank writing to the SWIFT authorities saying, in these banks, please let me know what are the outstanding liabilities. Because that system, being an international system, will have a record of it. You pull out the record and then you can cross-verify. You can write to the bank saying, please let me know. Otherwise, sitting here, I do not know which employee has created what liability on my behalf if my system allows him not to link it to an internal core banking system, take an approval. Because the core banking system has an approval system. And such kind of a 11,000 crore approval will go only the chairman of the bank. So clearly, it has not come to his notice. He is not even aware of it. And the first FIR or first notification was only 280 crores.
Exactly.
That was that particular LOU.
But what do you do with the PSU banks in your portfolio then? For example, if somebody does have PSU banks right now in their portfolio, do you stay on? Do you sell it? Or maybe is this an opportunity, because I'm sure there will be more stringent measures which will be thought of now? Yeah, okay. So first thing is that those who have it on their portfolio, you don't do anything about it. Because today the whole uncertainty is hammering the stock. So there's no point. You can't just assume that they are guilty just because they are PSU. There are good PSUs and there are bad PSUs. We don't know who is what. So first, a due diligence is required in the sense that every mutual fund owning a particular PSU bank stock, it requires that you call up the bank and ask, hey, do you have this linkage? Now, if there is that linkage, that gives you a source of comfort that a similar thing would not have happened in that bank. Now, if that bank doesn't have that, now at this stage, that doesn't mean automatically that there's a liability being created. It could have very well that they've escaped, that they've been all honest employees and that there was no such thing happening. So in panic, I don't think anybody should, but this is not the time to go and buy PSU banks because you do not know what is the repercussions of this. How is the Reserve Bank going to now react? Like already they have said now that transfer policy, like this 3-year transfer policy, most banks are in violation of it. They continue. So you're going to see a whole bunch of transfers. Next, you're going to have RBI probably saying that no further SWIFT can be done. So the systems of banking have to be overhauled. So and definitely there's no doubt that ultimately this is going to lead to merger, because a weak systemic bank cannot overnight change its system. The only way it can do is merger with a strong bank, and then those old systems are done away and the good bank systems are adopted in the new merged bank. So I think otherwise, you look at it, all these banks are a minimum of 30 to 40 years old. 71 was nationalization. So you can't just let it happen. So I think merger is clearly on the cards of all these systemically weak banks. Besides banks, or besides what's happened with PNB and the whole issue, what else do you think is weighing on the markets?
I think this issue is not weighing only on the banking space. This is weighing on the whole equity market as a risk premium for a market. Because anybody who invests, whether it's domestic investor or foreign investor, compared to the risk-free rate, there's an equity risk premium for the riskiness of equity. Now that's an intended risk. You know that the equities go through cycles, there are sectors which do well, GDP, economy. You study those risks and then you build in that risk premium. But this is an unintended risk. This is a risk which can come and hit your portfolio in multiple ways. So the risk premium for the market has gone up. So anybody who's then borrowing money outside and putting into a market now will demand a higher return, and those portfolios where the valuations are already high, where the chances of making the return are tough, he would rather cut his profits, book his profits, because he's not cutting losses, because I think more or less everybody has made money in the market. I would rather book profit and wait to see whether all of these things settle, then the equity premium comes back down to a more reasonable, I'll re-enter the market. So I think this has added to the riskiness of Indian stock market.
Okay. Fair enough. I just want to quickly highlight, we've been on the subject of PSU banks for the last 7-8 minutes. And I just want to highlight what's happening on the Nifty PSU Bank Index, if we can quickly put that up. And then look at some of these specifics, names, just 4 or 5 names I want to highlight. Union Bank of India, it's down, there you go, 4.5%, 4.6% cut on the PSU Bank index. It's a big fresh leg down, which we've seen in the last, 10 to 15 minutes. Union Bank of India will come up, it's down 10%. Look at Allahabad Bank, it's down another 8%. So there you go. Allahabad Bank next, 8%. UCO Bank is down 8%. Syndicate Bank is down 7.5%. PNB now is at 117, it's down 6.5%. PNB low was 100, so it's basically everything is back at the day low, if not making new lows. Look at Indian Bank down 6%. Bank of India is now 6% lower. Bank of Baroda is down 6%. So we're not just talking about mid-sized banks. Fresh way of selling, absolutely. Oriental Bank of Commerce, OBC down 5.5%. Canara Bank down. It's across the board. And it's spreading. SBI itself is down almost 4% now at about 261 or so. So this is a big selling in PSU Bank space. But we've got some news on Fortis as well. Ekta.
Yes, absolutely. And I think we need Ashwin to put it into context because there have been so many rulings which have come through with regards to Daiichi Fortis. And this is the Delhi High Court, which has in fact barred the Singh brothers from selling or creating any sort of third-party rights at this point in time, and they're going to hear Daiichi's plea for the execution of that 3,500 crore order, which they had already ruled upon some time ago and ruled in favor of Daiichi on the 26th of Feb. So that's going to be coming up next week. So that's interesting. So I think before that, they would be barred from selling any sort of assets and creating third-party rights. But that stock is resilient. I think we have Ashmit with us. Just a quick take on this, Ashmit, if you could just take us through the news in Fortis.
So as we had reported the last time, the Singh brothers, by way of losing their application in the Supreme Court, have exhausted all their legal remedies as far as India is concerned. Expectedly now, Daiichi moved to Delhi High Court for execution of that award of 3,500 crore rupees. Daiichi's position is quite clear that as far as Indian courts are concerned, they've upheld the arbitral award and that the Singh brothers are now required to pay up that amount of money. Now, what's important here is that the Delhi High Court, in protecting the interests of Daiichi, has made it abundantly clear that as far as Singh brothers and their assets are concerned, assets including their shareholding, cannot be touched in any way, cannot be sold in any way, cannot have third-party rights that can be created. In effect, a status quo order has been given by the Delhi High Court. The second important thing to keep in mind is that this stay order will remain in effect till the date of next hearing. The Delhi High Court, I beg your pardon, will be resuming hearing in this execution application on the 26th of February, which is only a few days away from now. What's important, however, is that simultaneously, the Delhi High Court has directed the Singh brothers to submit a payment plan wherein they'll be required to detail as to how they plan on mobilizing and then finally paying Daiichi that amount of 3,500 crore rupees. So clearly the onus as of now clearly rests on Singh brothers. It's up to them whether or not they can convince the Delhi High Court to put these proceedings on hold, given that they have already appealed in the Singapore Court of Appeals. That appeal in Singapore is currently pending. But as far as the Indian courts are concerned, they've upheld that this arbitral award is good and that needs to be made good by the Singh brothers by payment of 3,500 crore rupees.
Okay. All right, Ashmit. Thanks very much for that developing story there. We need to take a break now with the news that the news really is within the PSU banks in today's trade. We have the Bank Nifty, which is down 0.8%. We have private banks, which are selling off as well. IndusInd, which is down around 2% as well as we speak. Just to reiterate, it's all happening in the Bank Nifty as well as the mid-cap index. In fact, if we pull up the Bank Nifty constituents for you, our technical experts were pointing this out as well, that majority of the Bank Nifty is actually in private banks. So it would be better to look at what's happening with the PSU Bank Index at this point in time. The Nifty PSU Bank Index, which is at the low point of the day, showing a cut of over 4%. So multiple stocks which are under pressure at this point. PNB, for example, is now at the low point of the day, down 30% for the year, down 7% today.
The Nifty is not selling off more. It's not as if the Nifty is suddenly down another 20 points. It's basically down 60 points. But essentially, you've got PSU banks, as Ekta pointed out, which are some of the top losers by far. Union, UCO, Allahabad, Syndicate, PNB, Bank of India, Bank of Baroda. I mean, I think I can count, 8 PSU bank stocks which are down more than 6%. Union was down almost 11%. It's recovered a little bit, but I mean, small mercies there. SBI is also down about 4%. So that's what's going on. But it's not as if it's just the PSU Bank space. I mean, yes, by the extent of the fall, they are the largest, but you don't have a single, not for a while now, you don't a single sectoral index which is up in the green. Advanced decline extremely poor. So this is a down and out market this Monday afternoon. It's a wrap here on this edition of Trading Hours. Stay tuned right here.